Hey, what's going on, everybody? Welcome back to this weekend prep and review. We'll go ahead and review the trades. So, the first week of September started off pretty strong. See, I entered 4 trades, closed all 4. All 4 were winners, some big winners, some small winners, and brought in the total of $1,366. Which isn't too bad. I have a weekly goal of just 1,000, so I'll gladly take that. I know right there it says 6 trades, but I closed out 2 hedges that I've been holding on to for the past 2 months or so on the recent decline that happened on Thursday and Friday. So, alright, let's go ahead and see what I traded and review the trades. Alright, so here, I entered TDOC 6 DTE or 6 days to expiration, 215, 210 bull put spread for 240. So almost a full 1-to-1 risk reward trade. Alright, so what was I looking at? So right here, the main reason I entered the trade is because price pulled back to the 21 and 34 EMA right there, and they are cross positive from that spot right there. And as it says right there, the VWAP is stacked positive. Here, I'll click on it so you can see what this is here. Alright, so the EMAs are stacked positive. That is too big. I swear this little drawing thing gives me a lot of trouble. Alright, so VWAP is stacked positive, EMA stacked positive. Basically, it just means everything's moving positive. This blue line right here, that's the 50 SMA. And so you see it's all holding right there. And as I say right here on this little spot right here, the EMAs are clustered right below it, and I expect it to hold as support. And so that is my stop loss level. Alright, so the main reason I entered this trade is because of the 1 hour chart right here. You have these early end signals right here with the EMAs, and right here it looks like the momentum is going to shift positive with the squeeze that is right there. And this is already positive. So what I was looking for is this test, and then for it to go higher, for this to hold right here, then catch up and move higher. So that's what I was looking for. Now, how it did play out, as we go here on the daily chart. Alright, so if you're new to how I do this, so these triangles, those are where I bought options. That's when I entered them. And so I entered on this candle right here. So I sold the puts as it was declining. That's when you get the most premium for your puts, as you sell them as it is coming into support. And you see the next 2 days, 3 days, it popped up. And then right here where it gapped up and then it slowly started to sell off, I exited the trade for a small winner, which, like, so you can come right here. So it gapped up, sold off way more than I wanted. Alright, so then I held on to it. Once the 219 and the 34 EMA held as resistance, I just go ahead and exit it for a small winner. Granted, if I would have held on, it would have been a winner or a bigger profit in the end, but it is what it is. You didn't know that was going to happen. So overall, I was risking 300 and made 240, so not too bad. Next up is pins. I did a targeted butterfly. So 5 days to expiration, 35, 40, 45 targeted butterfly. And I ended up closing it for 110% return. at the gap because it hit my target. So this one I'm pretty pleased with. Did everything as I hoped for. So it says right here, as I was playing the 195-minute squeeze, there's also a daily high compression squeeze and the EMA is stacked positive. Early end signals. Basically has everything I'm looking for. So what did I do? So I drew the fibble from here to here. I targeted the 1272 extension because pins is a big mover whenever there are squeezes. And so that's when I entered. I sold the 40s, bought the 35s, and then the 45s. So I basically needed it in this area to be profitable for the butterfly, if we're not familiar with those. Maybe that's a video I should make in the future on how I like to do targeted butterflies. So anyways, the squeeze is telling me that it should be firing relatively soon. We got the squeeze down here on the 195-minute. So we have the high compression squeeze and it went to the mid compression and then it went to the low compression. And then from there, I'm looking for this momentum right here to shift higher and fire. And then so now we can see what exactly happened. So you can see right here in the next few days, it actually kept pushing, and it ended up opening right here and then pushing right towards my target, like it says right here in the 5-minute chart. So here it is, my 1272 extension. I ended up exiting like when it was about in this area and close it out for a decent little winner. Yeah, let's go to 1 minute. We'll see exactly what I entered. So shot up, gapped up, so I entered somewhere in this candle right there where those those triangles are. So not bad. Like it says over here, I was risking 250, but I made 602 on it. And then Lockheed Martin, 5 days expiration, September 4th, 390, 385 full put. This one was a simple reversion to the mean trade. We have the green 10x bars, pull back to the 21 EMA. And then this one, my stop is the 34 EMA. So I entered the trade. And this one did give me a little trouble because here's the one I exited on. So I entered on this candle, pulled back to the 34 EMA. So I'm like, all right, so I'm either going to stop out of this. And then luckily the next day, 34 EMA held and I had this huge bullish engulfing candle. And at that point I closed it because you see all this resistance right here where all these candles hit that level. And also it is the 786 fib level, and that is known to be pretty solid resistance. So as it came up, and then I got this 21 bar low candle, I exited the trade. And on this one, let's see, how did I do? It's risking 250, but made 436. I'll take it, not too bad. Oops, what happened there? All right, so it's T-Doc, Pins, and Lockheed Martin. All right, and the other one was the one I had on Lulu. It was Iron Condor. Got it for $1.25. So this is the two ways I play the squeeze indicator. I either play the squeeze or I play the consolidation. So right here, as it says right here, momentum is slowing down. Everything's slowing down. So I'm expecting it. What I was wanting it to do is to stay within the expected move, the expected move. So I sold the positions where the expected move is. Actually, it's right here. So all I wanted it to do is chop right here just for 4 to 5 days. But what ended up happening, so I'll show the other one, but it ended up coming out, testing it, and then we got the market correction. I brought it right back in. Luckily, lucked out on that one, because I was about to stop out on it. So we'll go to the day chart. Yeah, so my break even was about right here. No, actually that's a lie. Break even was a little higher. Barely went above it and then pulled it in, and then I exited around this area for only about 30% of the credit received. Not a big winner, but I'm happy to take that winner versus a loser. So only 150 or so. Well, after commissions, $136 winner. All right, and so these are hedges. I took a small loss. I've been holding these for a while, and like you see, I entered this VIX. I always have hedges on because you never know what's going to happen to cover my longs. So you can see I entered it way over here, and I positioned these with intent of the entire position going to zero. It's just an insurance premium that's required to be paid to be covered. So you can see it's working against me the whole time. I'm expecting to be a loser, and then we have all this happening. It shot up, and then so what I ended up doing was closing it for a small loser. So like I'll take my $27 loser versus 456. That's quite a change. And the reason I was okay with closing my hedge also is because I closed all my longs. No reason to hold a hedge, and I can now get out for close to break even. I gladly took that possibility. And then the other one that I took hedge off was SPX put butterfly. And this one I was looking for a pullback to a 21 EMA, which ended up doing, and I got off for a small loser. So all in all, they did what they were supposed to do. See, and that is all the trades that I did for the first week of September. And now we will go ahead and go over the prep into next week. If you have any questions about the setups I just discussed that I've done, please write a comment or ask a question in the section or in the comment section below, and I'll be happy to answer them. And if you, all right, so right here I got my charting platform up. So this is the the S&P 500 index, the SPX. I know that we had a big decline on Thursday and Friday. It may seem that way, but let's put it in perspective. It is still very much intact. Like the trend is still intact. Like we are clearly still going higher, or the trend shows that anyways. So we got down you can't really see it, but there's a green line and dotted line right there. That is, the dotted line is the 21 EMA and the green one is the 20 SMA. So you can see that support held. The 21 EMA holds a support very well, and this other dotted one is the 32 EMA. So you can see price dipped down, it hit the level and bounced up. So this may just be a temporary bottom. At the moment, me personally, what I'm thinking may happen, though anything is possible, but what I'm looking at is I'm looking at this probably being the high for a little bit, and I think we may chop around in here for a little bit, or maybe form some type of flag pattern or ascending triangle. Like say if this is the top, maybe it will come back up and then make a higher high and a higher high over a few weeks, and then maybe eventually break it. Maybe. Who knows? Just kind of what I'm thinking. But going into next week, I am still bullish. I'll be looking for buying opportunities going into Friday. So Tuesday, I'll probably load up on some positions. And yeah, so we can look at the other sectors. Here, we'll just do the futures. Tech, the NQ, did the same. Like it all has the same candle. Nothing's different. And then if we go to the Dow, same thing. If anything, I think the Dow was the strongest out of all of them. And I will show you why here in a minute. But going into next week, my favorite sectors are financials, industrials, and transports. I have 1, 2, 3, 4, 5, 6, 7, 7 tickers I'm going to be watching. Now I will show you why. So if you look right here, this is where I have all my sectors. That obviously the XLF, which is financials, IYT is transports, XLI is industrials, and then XLB is materials. So industrials I feel have been a little bit stronger here lately, and they still showed up, but financials has definitely taken a turn, is what I think. So if let me break down why I think that. So we're obviously been cruising higher. We're hitting this purplish line right here. That is the 200 SMA. We obviously need to break that in order for continuation to go higher. That's going to be a solid resistance line or level, and we need to break it. But I do believe financials are showing strength, and I'll show you what tickers I'm looking for in that one in here in a minute. And then transports, if you look at compared to the rest of the market, it didn't move a whole lot on Thursday and Friday. Sure, a little bit of a drop, but it still came down to 21 EMA and held just fine. So to me, transports are showing relative strength. And then the other one was industrials. And this one just barely pulled back to the 21 EMA and the 20 SMA. So relatively speaking, those are the sectors I believe are doing the best. So now my favorite setups. Right now, I'm liking Goldman Sachs. Okay, so right here's the 195 minute, right here's the daily, right here's the weekly. Now, why am I looking at this? So first of all, if you really look at it, this looks like one big flag forming. And then we have a squeeze. See how the candle is light blue right there? That means momentum is starting to shift higher like it is light blue right here. So I'm expecting it, once it fires, to shoot up like it did over here. Also in the weekly chart, obviously it's going to look like a flag if it does on this one. But it also is in a weekly squeeze. So therefore, and the EMAs are starting to turn positive. So I'm expecting within the next few weeks for this to fire to the long side, is what I believe will happen. But going into next week, if I could get a dip down to about 205-ish, maybe sell a 210, a 205 put credit spread, something like that. Depends how the market opens up. But I'm looking to go bullish on Goldman Sachs, mainly all because of that. And also, one other thing I could point it out. So it's been a very long time since, but that is the first. I really hate drawing with this mouse, if y'all weren't aware of that. That is the very first green 10x bar. And typically when a 10x bar happens, it trends for a little while, especially when there's a chart pattern in a squeeze. I mean, it could easily turn right back to yellow, but it certainly looks like it's getting ready to fire long. So there's Goldman Sachs. I also like basically all the big financials. Then I have Morgan Stanley. This one did well too, so when comparable to the rest of the market on the big decline. This one also somewhat has a flag wedge formation, so you connect the tops, boom. We just needed to break and go. So as a squeeze on the daily. EMAs are stacked positive on the weekly. So I just need a little pullback and then look for entry into that trade. Same setup. I play the same setup every time. So that's Morgan Stanley. And the next one is JP Morgan. This one, it's not overly my favorite. The main reason it's not my absolute favorite one out of all of them is because if you look at the weekly chart, it looks nothing like Morgan Stanley or Goldman Sachs does. I think my favorite is Goldman Sachs at the moment. I will keep an eye on all of them. But you see this one is having the hardest time recovering on the weekly chart, unlike the... So, like, look at it right now. So there's that one, and then we'll look at Goldman Sachs again. It hasn't recovered the same. So I think Goldman Sachs is my favorite so far for a financial sector setup. All right, next. All right. And these ones I am not looking for entry anytime soon, but I am keeping an eye on industrials. Main reason is because I believe industrials are picking up a little bit of strength. Let me erase that. So it's in a channel going higher. So you see that line right there. Right there. And what I want to do is I want to wait for a pullback to this area. And what I like to do in these channels is I like to enter in those targeted butterflies. So in this case, I may enter in a 155, 145, 165 butterfly as it's down here. So as it moves higher, however long it takes, then you could lock in the profit on that. That's one setup I'm watching on Caterpillar. And then the other one is, if you can't guess, it is... No, it's not Boeing. It's actually John Deere. The only reason I'm watching this one too is because it is showing outstanding relative strength. I mean, like, it is just that AEMA has been holding the whole time. And then whenever the market corrected, it barely moved. So I want to see it come down to this 21 EMA area and pick up a position and then ride it higher. So that is one thing I am watching there. So that's my industrials. And now my transports that I'm watching are FedEx. Not going to jump in it just yet, but same thing, I'm waiting for it to pull back to the 21 EMA level. Oh, actually, you know what? I just noticed this part. Let's see here. When is earnings? September 15th. I don't know. I'll keep an eye on that one. But the same thing earlier. And then UPS. All right. So pulled back to the 21 EMA. It's holding. It's got a squeeze building. The weekly chart is strong. The 95-minute chart is strong. So I'll keep an eye on this one to potentially ride this one higher as well. And that is it. That is all I'm watching. It is a short week next week. Remember, the market is closed on Mondays. And so enjoy your 3-day weekend. Actually, now that I'm looking at this, I may... What is next week's expiration? The 11th. They'll be on the 15th. What I might do, depending how this goes, and liquidity, I'll look into it later. I might just throw an iron condor on this bad boy right here. And the reason I may just throw on a condor is because right here, momentum has died. There's no squeeze. Earnings is coming up. It may just go sideways going into earnings, kind of like this, for a few days, and then you could take a small profit on it. but I will keep an eye on it to see if I even do that or not. All right, but that is it. That's all I have for this week's Weekend Prep and Review. If you have any questions, please ask them in the comment section below. If you found this video helpful, like it, subscribe, show your friends, and yeah, that's it. Enjoy your 3-day weekend and stay safe. Take care.